Swear. All right. Wow. All right. So you have this area where it comes up, where you have obviously a bullish move coming up, and then it comes down and it pogos off the 89. And so we have this area right here. And then you come up and you fail to go up. And this is the one that is the same move that we just talked about earlier, right? And so this was a good short coming down into this area. And then here you go, you have another push into this area that's slightly deeper because it's trying to get, it wants to get higher than this. It just can't. You know what I mean? So it needs to push deeper in order to try to hit a level of liquidity that's going to take it higher. And so this actually was a really good trade, honestly. I don't know why I didn't mark this. It was a really beautiful trade. So the way this one works, I'm going to cover this and I'm going to cover that. The way this trade works is it's just like a W, but your trend, all your price action is here. And so it breaks that trend line of price action, right? Do you see it? And so that's what you're looking for, is you're looking for price action to break away from the rest of your price action. So like here, your price action is breaking away from this price action. And so before any of this is made, this is your price action. And so then this breaks away from your price action. And then you have this bearish candle coming down and then abruptly stops, and you have this green indecision candle there and then a red one to match it, exact same height, right? The bodies. So that was that do. Makes it a, it's a, right, it's a doji.
So that becomes the upside down bull horns, whatever you call it.
Yes. So beard. You have a beard here. And so then once you see that this is a doji here, you're tapping into the 89. There's, if you need more to go off of, your last level of support is, so this is your run up, but your last level of support is this turn right here where it holds it here and goes back up. And so the line in between is, is literally the level of support that it's holding. It's manipulating it high, manipulating it low, and then bouncing out of it and going along. And so then there's your, and you got a wick going into it right there, a body of a candle stopping there, and then those two candles stopping there. And then right there, this is what I call that magic touch. It's like when you break out of an area and you come back and you literally like tap wick to wick with a candle, you know, then that is, it's like it's telling you, it's the same thing as having a price action coming out and stopping and then going up, then coming back and stopping at the exact same level. This is showing you that here I am, you can use me to come back and launch off of. Boom, you go back up. And so this trade right here is actually like a minimalist form of the M's and W's that you can take. And it's, like a bearish candle coming down. You got the two indecision candles there that make the doji in the middle. And then you had the bullish candle going out of it. And so you would take your trade right above that. And obviously having the 89 as like confluence is really helpful. Having that last point of structure is also very helpful. Let's say you missed that one because it happened too quick and you weren't quite sure, because that's usually one that you would miss, then you see that happening and showing it's running out of steam, and you take this trade and it short it down, and then you see that it finds support on the exact same area that it did before and just manipulates the low, but still closes the bodies above this area, right? Now you have an extra added confluence on top of that this is going up, right? Plus, it also breaks away from the price action that you have there. And so there's another trade right there that you could take. Does that make sense? Plus, you got the doji there. You got the green candle as confluent, saying that it's going to go up. It's sitting on top of this line right there, and you can take it right, like literally right there. If you want to see that it goes up above past this wick or something like that, and then you still
Broke the HMA, which is additional confluence, and stock
Right. And so then the only heat you're feeling is this first wick one tick down right there. Then it comes back and it stops on the 89. 89 is protecting you from there up. So another good one right there. Now this one here, the reason, do you understand why we wouldn't take this trade? Let's say it's a two-way trading day. Okay.
Yeah, I really don't.
The difference,
Oh, your M formation was basically a higher high and a higher low. That's the first thing I see as being negating it from being an M.
right? Um, well, you're kind of like you're on the right thing. Your risk. Where's your risk at?
Yeah, tons of it.
Huge. Like you murder yourself on this trade. You know, it might actually pan out and pay you out. I mean, probably. I actually think
But
this was a
also,
really good trade down.
you get a zone there that has just been broken. That I would honestly, what I would be looking for then is I would have ignored that M possibility at all just because of what I just said, and then I'd be looking for the W coming off that zone. And since that didn't happen, then I'm just looking for the next setup.
Perfect.
Yeah. That zone is also another area that it's an area where it's going to do something, and since it broke right back through it, it's like, yeah, this is not the setup I can take.
Right. And so then also, I mean, the main thing is you're like, I think, yeah, you're all over it.
Massive risk.
Yeah, massive risk. And this actually was a good trade. I remember it, but the risk is so massive on it that you know, unless you know a magic way to get into it without giving yourself a lot of risk. Ooh, I just
So
went.
if you